Good morning, sir. How are you on this bright and lovely? It's only Tuesday. It feels later than that, doesn't it?
It really does. You don't have to say it.
I know. What can I tell you?
But it's good. It's light outside. Yesterday, 80 degrees. We'll take that. Today, 75. It's nice to, see the weather from in here.
Yeah, and actually, it was light at 8 o'clock at night, which was nice to see.
That's pretty good,
so
yeah.
We're getting there.
It's still pitch black when you wake up.
Yeah, usually is.
Insane.
Usually is. Yeah, monster accident on the expressway coming in.
Really?
Truck turned over, and I guess the guy got out, but it caught on fire. So.
Oh, jeez.
They had everybody getting off and then getting back on. So.
Oh, man.
Yeah, it's fascinating.
Don't need that with, how many lanes they have closed down now?
Close them all.
Well, yeah. I mean, aren't they back
but
doing...
this was on the Edens before we got to the other one.
Oh, okay. So. Gotcha.
Yeah. Yeah, I could only imagine if you came in at a more normal time, it's going to be a rough morning in.
I had some traffic, too. The bike station was out of e-bikes, so I had to scooter.
Now, you will never take the 30-pound divvy bike.
I take them sometimes, but I wanted to look my best, so it was a little hot out. I didn't want to come in sweating.
Gotcha.
Yeah.
And you do the scooter helmetless, I take it, because this is a job every morning.
Yeah, you can't put a
mess up
on.
what the team does in the morning.
Yeah, and I actually need another reason I can't use the standard bike is because I need to pick up more than 12 miles an hour so I can. Get some wind through this. Yeah, exactly.
All right.
To get the right flow. So
I don't know. And is it easy to transition to the scooter? The scooter,
Yeah, but it's funny.
I'm not the king of balance. Things like that were never easy to me.
And on Fulton, there's 2 intersections that are pretty rough cobblestone.
Yeah.
You can't take that on a scooter. I've tried as kind of an ego thing of I just got to bend my knees. Is it better
going faster, or it's just that the wheels are just too small?
Well, there's just there's no suspension.
Oh.
And so these are pretty, and so you're just there's no.
So you stop and walk.
No, you kind of have to go around.
Oh, God forbid you walk across with the scooter.
That would be embarrassing.
Would it be?
Yeah, I think.
And now, how do you pay for the scooter? Is it you've got a card and you swipe it?
Through the Lyft app.
Through the Lyft app,
yeah,
really?
So Lyft owns Divvy.
Now, are you a Lyft guy or an Uber guy, or are you one of the?
I check both.
Look at both.
I check both.
Everybody does. I don't know. I guess.
And I'll tell you my assessment is Uber will give me better flash promotions because I don't use it a ton. So they'll say
that's the game. Because I get those from Lyft.
Off.
I get those from Lyft now, and I never take them. I always forget about them.
Yeah, Lyft is usually base cheaper,
right,
but the pickup time is always longer.
Really?
Yeah.
Well, yeah, but Uber's just never accurate, too. 2 minutes until pickup, and then all of a sudden,
they're circling
the little
the
car shows up, and it's 7. And the guy's freaking on Michigan Avenue.
Yeah. So, yeah, I'd say in terms of if I had unlimited money, I'd go Uber probably every time, but it's worth checking both. There's also, you can game the Uber app if you sign in, put in where you're going, and check the price 10 minutes before you actually have to book it. Then you just turn your phone off. They'll send you a push notification if prices drop, and then
you have to turn your phone off.
Right. Yeah.
Okay.
You just lock your phone.
I tried that game at the airport, and every time I do that, it comes up cheap, and then it comes up perversely expensive.
Yeah. Airport and ball games.
Scam.
Yeah.
Yeah.
There's no scheming that one.
It's a vast communist conspiracy.
I think so.
Okay.
Yeah. That's your After Dark segment?
Yes, I guess so. What do we got going on today, my friend?
We've got a lot we're ramping up for if we want to hop into the platform. Forex markets this week. Was last week the shortened week? Last week? Yeah, last Monday was the UK holiday.
Yep.
So we'll talk about it. I put some slides together on volatility. So definitely in the past week seeing a lot more constrained volatility in Forex markets. But I think we're going to pick up. We're picking up overnight a little bit.
Dollar's back. No,
Dollar's back.
It's interesting because we went out well above 134 in cable and euro strong above 114. And I was like, maybe they're going to build, because Frank and I had talked in the morning that the ranges are kind of set now. So
and anywhere you checked in throughout the morning, it continued to just kind of churn higher, both of those pairs.
Right. But it seems like maybe the ranges are, because I was actually surprised to see, again, a big sell-off. No, they took out about a third of what they put in yesterday from the lows. But it's definitely they didn't clear the ground to the upside.
No, and it's interesting. It's always an interesting exercise for me when you get in here around this time to just look at. You can see the price change, obviously the percentage change from yesterday's close, but knowing the hours when those moves happened, I think speaks a lot, because you have a bunch of players entering throughout the night, and a lot of times it's like, oh, that was London taking it out.
Right.
Here, we started to slide just from kind of U.S. market close. We know this is kind of the most illiquid time of the day. But yeah, no, not really two-sided until maybe Europe waking up, but taking that all out throughout. We're still in the London trading session, but
Yeah. So how do you look at it? We're through that 134, even 0510 was kind of the top. Now, if you were short, you would have to think if they got up to 134 and a half, you probably had set that as your mechanic, said, I'm going to cover this. If you did, you took a smaller loss. If you didn't, you're still in it. How do you look at this now that it's collapsed back into the upper end of the range?
yeah, I mean it's hard to make
It's slop. This is where the markets get a little sloppy.
exactly
And
because
it's a little bit harder to I mean, if we really were going to put another leg to the upside, and statistically we've run a lot to the upside, hard to say, but we know that this market tends to feed on itself. We could print 136, 136 and a half. I think it's low probability, but it could certainly do it. Not the energy to get there.
No, but yeah, to your point, I'm looking at kind of both sides. Where here, this overnight heading into this morning, pretty supportive to me. That there's at least early through the day, I'd be surprised if we start to retest above 134 with a lot of momentum. But like you said, throughout yesterday, we haven't made up really any ground from where we started the week.
Right.
And so, last week we had kind of early dollar momentum and then just kind of stayed around there.
Giving back less than everything else, though.
Yeah.
Let's take a look at Euro Sterling really quickly, and then we'll go over to.
Yeah, I mean, we're back around 85 here.
Right.
For some historical context, because this is a non-dollar pair. We started the year and a lot of the year at really historic lows. Below 83 is kind of the low for a lot of time. Now, euro gaining a lot back, but in April, a really up and down story.
Yeah.
What do you make of it?
I think the same thing. We looked at this yesterday. 85 kind of held and it bounced from it, but we're right back there again. So I don't know. I honestly think it's a little easier for me to look at selling some sterling up here and buying some euro, but that just isn't working right now. And from this chart, what we're seeing is that euro has, over the last 20 trading days, underperformed sterling. So we don't have to do any math or ratios or anything. Just go to the cross, and it just tells you right now that the euro on the left side of the quote rail there is underperforming against cable right now. I honestly thought we might see a little bit of, rather than saying that, well, euro and cable against the dollar are both high. Yes, they are. I don't want to buy a 500-point rally. Fair enough if you don't want to. But if you want to trade the relative value of the two, you can either, again, if you were using another set of products, have to construct a pairs trade that is not easy and expensive to do in terms of capital cost, or you can just trade the underlying, which is euro sterling. So I honestly thought we were going to see a little bit of bounce here. We haven't fallen. We're wrapped around 85 cents. So I don't know. I still think it's probably a play, but this is also one that if it doesn't, a lot of times I don't put time on trades. This is one, if it doesn't start to exhibit that pushback to 85.5 or 86, maybe we do ground a little bit lower. But we had an election in Canada yesterday.
We did.
So it must
yeah.
be massively changed.
Right,
Or
you are.
Not so much.
Not so much. I think the result, as expected, what you could see is some volatility around when results were coming in. I think this is when
Are we back to 30 pips as volatile?
I mean,
As traders, we absolutely are. We're mindful of, we get these runs like we've had the past 6 weeks, and inevitably, the only thing I can tell you, how long will they run? I have no idea. They will slow down, and we're in that slowdown period right now. So markets are going to get a little bit tighter, a little decrease in volatility, a little less elastic.
I got some slides on that. You want to go into it?
Oh, let's do it, Glenn. I know you wouldn't have come without the A game.
Let's flip into some slides here. We've got exactly what you're talking about. I've got some high probability Forex setups for us around some standard deviations and how to trade, when volatility starts to come in, because we've seen some unprecedented volatility in U.S. dollar last month, hitting I think highs since the pandemic, and for some pairs exceeding those highs. I think Swiss franc being one of them. And so here I've pulled a little heat map for you, standard deviations, and this is just the rolling daily closes. So it gives you an idea of what a daily range will be for each of these pairs. And we've got it over 1 week, 1 month, 3 months, and 6 months. So you can see that 1 month column for all pairs is the most volatile that they've seen. And 1 week, not a lot of data points. I wouldn't necessarily hang my hat on a 1 week standard deviation, but it is worth noting that this past week, 6 trading days, has been very quiet compared to April and March as well. And so you compare this to the 6 month time frame that encompasses all this data, and you start to get a little smoother picture. Do you think that's where we're headed, or could this just be, last week, a really light economic data week. This week, we're expected to pick it up coming into the end of this week with a lot of U.S. data. We've got GDP, we've got, I think, PCE, we've got non-farm payrolls, we've got a BOJ meeting, a FOMC meeting shortly following. So, if there was a week to have a lull, it would have been last week. Do you see us going back to this wild rest of April, or do you think we can point to the 6 month as kind of a benchmark?
I think that we kind of, sure, we've got all those things on the horizons, known unknowns, in other words, non-farm payrolls, FOMC, BOJ. Markets do get a little tired sometime, and I think we're a little tired right now. So we are holding on to more of the upper end of the range than I would have thought, but sometimes it just takes a while, and then it will release. I don't know. The tariff stuff is still kind of a cluttered mess, but it seems like, from what I read this morning, they're going to make exceptions for certain car parts made in certain places. I don't know.
It's getting more and more vague. But yeah.
Yeah, and at some point it almost seems like, and then he'll lose interest and just kind of walk away from it, and it'll all go away. I don't know.
But yeah, either scenario.
So I think that, we probably revert down to, now you can't say, I still think event risk hasn't changed. They can tweet at any time. We're in price ranges we haven't seen in a long time. Give you that, so the market gets more elastic. I'm going to stick with 90 points of euros, 80 pips of cable. Nothing wrong with that.
Right.
What you're going to do is just get a lot fewer trades, because the market itself is only giving you so much. Now, if that is what you want to do, there's nothing. The one thing is, and this was always hard before we had all these fantastic stats and everything, we would feel our way through these changes in
Right.
volatility and thus in ranges. And sometimes you'd bring those ranges where you had interest in too tight, too quickly, and the markets would come back out. So I think for me, wanting to be a little bit more active, I'm going to take a measured approach and start to bring myself back in. Am I coming back into, 6 months of, 45 pips in Aussie, 59 in Euro? I'm probably coming back into, somewhere, and again, this is, so selective. The 27 pips in Aussie is all we've gotten. I'm not coming in. I'm
Right.
not saying now my new trading range is
Aggressive.
30 points.
Yeah.
The width of where we've been is now it's going to be hard to pick the right 30 points.
Right.
Now, what this is saying that, well, then you're going to miss some trades, Pete. Yeah, I'm going to miss some trades because I'm not accepting this. I think that short-dated one just speaks to conversion of vol, not where vol's going to
Exactly.
settle. So I will shave off the extremes that we saw in the 1 month and start to work my way back in where I start to get more trades on the extremes back and forth and work from that.
Yep. And so here we've got the 3-month, kind of the Goldilocks
Right.
of that table, encompassing both the very volatile last month and the not so volatile last week. And so here we've got these ranges, and you touched on it perfectly, that these will just tell you, give you historic context for where these daily price changes closed within 68% of the time, as it is by pair. And so you can use these ranges as guide rails for entry points once a pair has made one of these moves of this magnitude within the time frame that you're looking at, as well as manage your profit or loss targets, which is equally important because even if you're right, you have to be able to pull that off. And setting a profit target too high and unreasonably high can get you in that trade, just kind of waiting for longer than you think. And the same with stop losses. As we both know, things can run away from you quicker than you think. And so making sure you set these can kind of give just some important context around what to expect.
Absolutely. And we go back to our mechanics. So we've got non-farm payrolls coming up on Friday. I'm going to go back to my 3-month numbers. I'm going to add on 25 to 50% of them. Those are going to be my scalping ranges for non-farm payrolls. Just back to like what we've done previously. Things like month end.
Yep.
We've got coming up now. The markets. You would think we've moved so much this month. There'll be huge flows.
Maybe.
Sure. Who knows? I don't know. And some of that may have already been done because markets move. But these numbers right there are going to be my rails for probably everything except Kiwi and Aussie, just because I think there may be a little bit more elasticity there.
Right.
But I may miss something. For that 10 to 11 o'clock Central Standard Time frame when I like to trade month end for FX, I'm going to use exactly those numbers to see if a market gets to that point. I'm going to look to fade that move.
Yeah, and here we have a USD JPY example that was, the highest pip range, but of course we've got really high prices in here as well. And so just wanted to point out that we have around 100 pips that we've noted for the standard
Right.
deviation. And you can take this really a ton of ways because we've had moves greater, if you look at just yesterday, greater than that one standard deviation move running away. And then we've also had, you look at last Wednesday, I think is a great example where, the actual high to low range was greater than that one standard
Right.
deviation move, but does come in. You're also seeing, the day after an inside day. And so you can use these kind of as a momentum or a contrarian trader. Momentum saying, this is one of those days. It's not acting like normal. Only 2/3 probability that these stay within these ranges. So identifying which days aren't like the others versus which could be. And my last point I want to make here is because you could be looking at this and saying, Australian dollar only 55 pips. That's almost half of what the dollar yen volatility
Right.
is. Is that even worth trading? And so I brought in some key considerations that when you're thinking about just standard deviations, you have to take into account all of the product specs for both of these markets that actually shake out very differently into a US dollar profit and loss. And so here on the table here, we've got, if you had a hypothetical example, if you had $5,000 and you were looking to use all of that on one trade, you look at the margin requirements, Australian dollar requires less to hold. Right. And so your max trade size for that would be 2.59 lots at around these current prices. Your dollars per pip are a lot more because you've leveraged up a lot more in that pair compared to dollar yen.
Yep.
And then you factor in what the expected move would be in a day, and this is extremely hypothetical. If you caught all of that range to the profit side or the loss side, you've got more than double the nominal value to your effect to your account trading Australian dollar than yen. So a lot more to consider, right now than just these ranges, but how these products are actually set up.
I think that's great because that feeds into, and sometimes we don't speak as much about the capital efficiency aspect as we should. But the different margin rates on the different pairs give you more latitude in terms of the bite you can take. Now, again, choosing a bite that's comfortable for you is critically important. One that you can make unbiased decisions around is great. But this is another great way to think about, well, I'm not trading the big swinging one. It depends on, how you use your capital and what you want to do. This is one of the great things with SpotFX is you can tailor that exposure. And again, larger size is going to create larger returns, but also expose you to larger losses.
Right.
As long as you keep that context in mind and you're comfortable with both those numbers, you're in a great spot.
There you have it.
Wonderful stuff there, Glenn.
That's all we've got here today. We'll see if the volatility continues to constrict or if we're in for another big week here.
Even if it does, we're baselining back to, we're not at 28 pips of euro. We're baselining back to a little bit more standard ranges. Still means lots of trading opportunity for us.
Oh, yeah, there you have it. Happy trading, everybody. Up next, we've got Tom, Tony, and Vanetta. Stay tuned.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help